Perfect, 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 perfect. So what we're going to do now is we're going to talk a little bit about the basics of reading a price chart. I just showed you guys or told you guys how important that was. And then I want to show you how I transitioned to really going back to a lot of the concepts that I used and failed with before, and how I can now use them, or how I do now use them in a very consistently profitable way. Now, we're going to be doing a lot of live trading and teaching throughout this event, and understand that everything that we show you is kind of, it's built on this foundation, right? Every solid building, every solid house has a very, very strong foundation. So it's very important that you understand this. It's very important that you go back when the recordings come out and you review it. If not, you're going to have a better likelihood of being lost when we do the live analysis, because sometimes the live analysis can be pretty quick. Now, again, when we start doing live analysis, I don't expect you guys to know everything, but if you can understand the general concepts of what we're looking at and why we're looking at it, it's going to make life a lot easier for you. So we're actually, this is actually one of the things we looked at in this weekend's video. If you guys remember Pound Canada Ascending Triangle, but let's put that to the side here. Let's start off by talking about how price moves. Now, price moves in 3 different ways. Who can tell me what those 3 ways are? We go up, we go down, and we go sideways, right? It doesn't get any easier than that. Boom, there you go, you're done. Workshop over. But seriously, I think people confuse price more than they need to. It only moves in 3 ways. It goes up, it goes down, and sideways, if this were kind of sideways, right? And in the most simplest form, the easiest way to identify a bullish trend or an uptrend is asking yourself this question. Is price action moving from the bottom left-hand corner of my screen to the top right-hand corner of my screen? If yes, then most likely you're in a bullish trend, right? If we were to reverse this, give you a little pop quiz. I know this seems simple, but trust me, there are a lot of traders that haven't looked at it this way, and this is informative. If price is moving from the upper left-hand corner of your screen to the bottom right-hand corner of your screen, what type of trend are we in? We are bearish. And if price is moving just gently across the middle, then what type of market condition are we in? We are in consolidation. Yeah, we are ranging, right? And again, this is an oversimplified way of doing it, but you want to start with the very, very simple and then build your way up. And you can look at a price chart, even if we just kind of bring this randomly up here. I mean, if we zoom in here and I say, take a look at the current move. Are we bullish or bearish? Let's just delete everything else off the screen. Are we bullish or bearish? We are bearish, right? How do we know that we're bearish? Based on what I just taught you. We're moving from the upper left to the bottom right, right? If we zoom in on kind of this most recent price action, what type of trend are we in now? Well, now we're bullish, right? Bottom left to top right. A lot of you guys thought I was playing. This is a very simple way to identify, right? Jason Grayson, I think he's going to show you maybe some moving averages later in the week. That's another way you can use too, as a visual just representation. And now you have something like this, right? And what do we call this type of trend? This is consolidation, right? We're essentially moving across the middle of the market, getting to a little bit of an uptrend at the end, but essentially we're staying in the middle of the screen, right? So that's a very basic way to identify a trend. And if you're not comfortable with doing that, first and foremost, practice it. Practice it, practice it, practice it. Oversimplify it. Start very, very simple and slowly add the details to it. Now, of course, for anyone that's ever spent any time in the market, is it that simple? Are we going to get very far just looking at the corners of our screen and identifying if we're going from left to right or right to left, up, down? No. So what we wanted to do is we wanted to put in a rules-based way to identify trend. right? And this is kind of the engineering part, right? I'm not a engineer myself. A little musical engineering, right? Made some money in college. But we want to put a very straightforward, rules-based process so that we can consistently identify the same thing every single time. And I think that's a big burden for a lot of traders, or a big setback for a lot of traders, that they just don't do things consistently. How many of you guys look at a price chart and then each time you look at it, you see something else? Right? There's no consistency in that, right? And I've simplified what it takes to be a successful trader, and it's this equation, right? Consistent analysis plus consistent execution equals consistent results. Meaning that if you look and analyze the price chart the same exact way every single time, you're going to be looking for the same things every single time. If you consistently execute your trade plan, your rules-based trade plan, the same way each and every time, you're going to be taking good trades, because you're only taking trades that fit within your trade plan. If you do those two things, you'll get the results that you desire. It's that simple. Not necessarily easy, but it's that simple. So we want to start off by creating a rules-based way to identify a trend. And I showed you this with some of the strategies I talked about. Let's first start off with our initial move, right? So this, I'm going to have to zoom in a little bit here so I don't get all funky with my mouse. This is going to be our initial move, right? This is going to be simple, not easy. Simple, not easy. This is going to be our initial move. So we're going to label this first part our starting point, right? This is where our move starts. The market makes a deliberate move from a swing low to a swing high. Would you guys agree? The end of this move is going to be called our initial structure high. I cannot spell. Initial structure high. There we go. Now, at this point, we're not in a trend. We just have the market making a move. It does this all the time. We cannot say that we're bullish. We cannot say that we're bearish. We cannot say that we're in consolidation. The market has just made a single move. It is not enough to really determine what the market is doing and what the market is likely to do next. So at some point, right, because price doesn't go up forever, what happens? At some point, we get a little bit of a relief, right? A retracement, a pullback, whatever terminology you want to use, where the market does something like this, right? Have you guys seen this move before? This is called a pullback. Again, pullback, retracement, outside return, whatever you want to call it. It doesn't matter. You can call it a purple monkey for all I care, as long as you know what it represents. Now, a lot of traders get fooled, right? They think that this is automatically an uptrend because it made one move. This is automatically a downtrend because it made one move. If you guys are having trouble seeing, try type in if you're having trouble seeing the chart. I see 2 people, but if it's 2 out of 200, then that's a you problem. Try logging out then logging back in. Sometimes I can reload my screen share, but things are doing good and I don't want to test the market gods. So, okay. Perfect. All right. So a lot of people are confused and they think that this simple move makes us in a bearish trend or a downward trend. And you can see where the confusion lies, because now it's like, oh no, we were in an uptrend during this move. Oh no, we were in a downtrend during that move. Right? You guys ever been there? Uptrend, uptrend. Oh no, downtrend, downtrend. And every kind of wiggle the market moves, you're bouncing back and forth between each trend. We're going to stop that today. No mas. We're going to stop that today. Because we are still not in a trend here. How we define trends here at Tier 1 Trading, and other people and places can do it differently. I don't really care. All I care about how I personally do it, because I'm the only one in charge of my account. How we define a trend is we need a 3-point move. So not only do we need this starting point to initial structure high, move 1, not only do we need this pullback, a little bit of a relief from a trend, because we know trends kind of ebb and flow, but then we need confirmation by price action extending further and giving us what's called a new structure high. This is the 3-point move that we require in order to have a trend, right? Move 1, move 2, put on this side of it, and then move 3. Starting point to new structure, to initial structure high, initial structure high to pullback, retracement, outside return, whatever you want to call it, and then another extension forward or upward, giving us a new structure high. Only at this moment can we say that we are in a bullish trend. Does that make sense? All right, let's do one for a bearish trend. Artist says that I find it hardest to define rules for swings. How many candles? See, it's not even about candles. It's about reading price, reading structure. Not about candles at all. It's about reading structure and what it does in comparison to previous structure. We'll take another example. I want you guys to walk me through it. So we're going to do a bearish move this time. So our first move is here, right? What should we label this point? Starting point. Sounds like an awesome name for like a webinar. Starting point. All right. And when this move ends, what do we call this? Initial structure low. Do we have a bearish trend? No. Okay. What happens next? What typically happens after a directional move gets exhausted and comes to an end? We get a little bit of a relief, right? The market does something like this, right? Let's just make it all the way up here, right? Just to prove that these things look different. What does this move eventually end up being called? This is a pullback. Do we have a bearish trend? No. If we get another extension down, if we break this previous level, our previous initial structure low, right? Whether it's one candle, whether it's 15 billion candles, those would be some very small candles. We can now label this point new structure high. Scott. At some point this week, you're going to hear me say, you're going to see me write that. We're going to be looking at a high, and I'm going to say it's a low, or we're going to be looking at a double top, and I'm going to call it a double bottom at some point. So I want to get it out the way first. That way I can blame it on Scott all week. Scott was in my head. New structure low. Do we have our 3-point move? And since we have our 3-point move, we can confidently say that we are in what? A bearish trend. Now, what if this move came right here? Does that change anything? Scott says yes. Scott? No confirmation, no trend. Why do we not have a bearish trend here, right? We pulled back, price started moving downward. Why not? It's moving down. Look, top left corner to bottom right. Told you guys. We didn't violate the previous structure low, right? And as long as the market is putting in this pattern, right? This is a pattern of, if we were to look at it a different way, of lower highs and lower lows, right? As long as we're putting in this pattern, we are in a bearish trend, right? So we'll draw it out. So we have this pullback, new structure low, bearish trend, right? Pullback, new structure low, bearish trend. Now, for you guys that are tier 1 members, this is your chance to shine a little bit. When is the trend violated? What would have to happen in order for us not to be in a bearish trend anymore? I'll kind of shift the writings here. Yep, we would need to violate our previous pullback. So I'm going to give you a very easy, this is probably going to be the easiest way to look at violation of a trend, right? Now, this is important. Liam brings up a good point. So we have violated a trend here, right? That means we're no longer in a bearish trend. Does that now mean that we're in a bullish trend? Ooh, sneaky, sneaky. No, why not? Why not? What do we need to be in a bullish trend? The 3-point move. You guys are sharp, man. You guys are sharp. I don't think there's been, aside from Scott with that one bad answer, I don't think there's been I think you guys have been on point. That must mean I'm a great teacher. It doesn't mean you guys are knowledgeable. We're just really good at teaching. That's what it must be, right? Yeah. So once we violate this level, we are no longer in a bearish trend. However, we are not in a bullish trend. And I'm gonna simplify this for you a little bit. And this is something that we did for our traders in. I did an initial course called the Foundation course, which was very well received. It was a different way of looking at price movement and price action, and I was kind of nervous about it because you guys will start to see that my brain works differently than a lot of other people's brains, and it ended up working really, really, really good. However, there were some holes in the course. We didn't, in fact, there was a course called Bridging the Gap, the Foundation course 2.0, because there were kind of holes in the course between, there were questions that we gathered during the years of teaching with our traders that needed to be addressed in the course, and we added it. And something I ended up doing was really just teaching this concept in an even simpler way. So, quick quiz again. What do we have here? It's repetitive, but we need to repeat this so it's annoying and it stays in your brain. What do we have up here? Starting point, good. Yep. If it's boring, it's good. I remember talking to, it was a trader we work with, Taylor, who said he's in a live room every day and it's just boring because I know what Akil's going to do before he does it every day. He's like, and that's how you know I've got it. This is what? Initial structure low. I'm going to get lazy and just type the letters. This move up here is going to be what? Outside return or pullback. We've been saying pullback all day, so we'll just do PB. It's about time to add a J to that. And then this is going to be our new structure low, and we're officially in what once we get to this point? Officially in a downtrend, right? Price action then puts in another pullback. We then followed it up with a violation of our new structure low, right? Making this our new structure low, and then making this our previous structure low. Here's what you need to pay attention to. Let's actually do one more. So let's say the market is doing this, right? We have made a pullback. There are two levels we need to pay attention to. One is going to be our previous pullback here. The other is going to be our most recent new structure low here. And this is how we can easily, not that color, easily simplify things, right? If we violate this level, then we confirm the current trend. If we violate this level, then we invalidate the current trend. Simple, rules-based, if-then syntax. It's as simple as that. There's no questions, right? There's no paralysis analysis, or you're not going into your screen and being like, oh, I don't know if this is a trend or a violation, right? It's one or the other. It's black or white. If we violate this level, yes, we are in a confirmed bearish trend. If we violate this level, yes, the current trend has been invalidated. There's no questions. And when you have no room for questions, guys, when you have no room for questions, you don't question yourself. And when you don't question yourself, you don't get confused. When you don't get confused, you avoid analysis paralysis. When you avoid analysis paralysis, you can focus your energy on what really matters, which is finding opportunities that meet your rules in the market. Make sense? Are we ready to talk about how these previous failing strategies now come into play here? Just want to make sure everyone gets this concept first, because again, this is the foundation of everything that we're going to do from this point forward. And you should understand it. You don't have to, there's still I'm not saying you should be able to go out on a chart right now and draw this stuff out, but you should have an understanding of the concepts. I wrote it down, right? I advise you write it down. You retain more information when you write it down. I advise teaching it to someone else if you have a trading friend as well. But as long as you understand the core concept of this is what it looks like. Maybe you can't quite get on the price chart and implement it right away. Maybe you're looking at this and this is still like, right? Maybe you can't necessarily get on here and start going, oh, here, here we go, there we go, right? Maybe you can't do this yet. Which, by the way, this is a perfect example of a bullish trend. Maybe you can't do this yet, but hopefully you understand the general concepts. That's what we're trying to get across here, right? Because if you understand something, then you can practice it. If you can practice it, you'll get better at it. And then the question is not knowing it. You know the knowledge. The question is, are you willing to take the time and put in the effort to practice it and get better? And that's on you. That's on you. If you're someone like me, if you're someone like Jason Grayson, who's determined to get better, like ultimate failure is not an option, then you're just going to put in the work necessary until it makes sense and practice every day and get better at it. So now I'm off track. I don't know what we're supposed to talk about next. Oh, let's implement some of these concepts. Let's implement some of these concepts. What is the software you use to practice that? Price chart. Price chart. Bare, naked price chart. Where's that picture I had? I was going to put up a picture of myself, which represents how I trade. Naked charts. Maybe a candlestick placed in a very specific location. Gabrielle says don't do it yet, so I won't do it. I guess we want people to stay. But yeah, just any price chart. I'm on TradingView right now. I use NinjaTrader personally. You can use MetaTrader. You can use whatever what you can do. You don't even need a price chart for this. Honestly, you can draw it out on a piece of paper. You can have someone else draw out some zigzags and then go through the other person's zigzags and identify a trend. Seriously, if you have a kid or someone that just say, hey, draw out like a stair step pattern, like a zigzag pattern, and then go back on it and write it out yourself. Right? So whatever, you don't need any special system. You just need you. You just need you and preferably a price chart. So let's talk about implementing some of these strategies, right? Because this is going to look very familiar, right? And in fact, let's start with the Fibonacci failure strategy, right? One of the reasons that I failed with the Fibonacci failure strategy is I told you guys, I didn't know how to understand a trend, right? I didn't know how to read a trend. I was just drawing off Fibonacci's, right? If we simplify that Fibonacci failure strategy, right, we take a look at this chart right here. Is this not a trade? Is this not a trade? This one may be close, hit the 618. I do not use Renko bars, no. I use range bars. I think they're much better than Renkos. Renkos are, they aren't what they seem necessarily. But the Fibonacci failure strategy is no different than reading a trend. The difference is I didn't know how to read a trend. So I now look at it as one of my favorite strategies called the pullback trade, right? And if we take a look here, right, where in the past we would have had a move like this, right? What's this move up here called? Starting point. What's this move down here called? Gotta be fast here. Initial structure low, right? I would look for this, and then I would look to trade it down. But guess what we weren't in necessarily? A trend. So many times we may be in an opposite trend. We may be in consolidation. And I've got a losing trade on my hands because we weren't actually trending. However, with the knowledge of identifying that we're in a trend, right? If instead of trading it right here, if I just wait until this, now what do I have? Now I have a confirmed 3-point move. I have a confirmed bearish trend. Now I could put a rule back into that strategy. If I confirm that we're in a bearish trend, then look for that Fibonacci failure trade, where I take my Fibonacci retracement, I drag it from the swing high to the swing low. I look for it to complete within that magical area, that 3D2 to 618 area. And now I've just added a filter to my strategy, where instead of taking every single pullback between the 3D2 and the 618, I'm only taking opportunities where we're in a clearly defined trend. Do you think that was going to help or hurt my previous results? Help massively, right? We can take a look at something like this. This was actually, again, this is one of the patterns we looked at in this week's video, right? We'll just cut a big portion out of it here. Boom, boom, boom. What do we have right here? Fibonacci retracement, swing low, the swing high. Where do we come to? $382 retracement, right? But you're adding a filter of being in the trend. You're adding a filter of being in the trend. So once I had the knowledge of how price action worked, I was able to take that old pullback type of strategy and implement it in a different way. Now, I don't currently trade the Fibonacci failure pattern strategy. I trade something more dynamic, but I would always be interested in how I can go back and retest it with this new knowledge. I do still trade a pullback trade, and this is actually a good example. This is, not to get too advanced, this is something called an ascending triangle. This is a bullish breakout pattern. One of the ways of getting involved in this trade is waiting for the confirmed breakout, which we're currently doing right now. You see this, if you can get rid of this, you see this white candle up here? Right? We're currently breaking out. So essentially, we're working on creating a new structure high. When we create this new structure high, if we create, it's a daily chart, so we won't know until this daily candle completes. But if we create this new structure high, does that confirm the bullish trend or does it invalidate the bullish trend? I know it's a little bit tricky. I didn't plan on getting into the candlesticks, but it happens to be on my screen and I got sidetracked. So I apologize if we're getting kind of too confusing at first. I'll I'll back off, I promise. But the point is, when I see something like this, again, if we get a daily close, it confirms a bullish trend, right? So I look at this and I say, confirmation of, or let's say this, new structure high equals confirmation of bullish trend. If we have a confirmation of bullish trend, can I then make the prediction that we're more likely to go up or down? Bigger picture, right? And this is something called IPD, identify, predict, decide, execute. We'll talk about it more tomorrow. But my prediction is up. So what I would then look for on a lower time frame is I would look for that pullback, right? A move very similar to that Fibonacci failure strategy, a pullback, and a chance to involve myself in the upward move. You guys with me, or did I lose you? I feel like I lost a lot of people. Perfect sense. Okay. And again, if you want to break it down to another level, not to get too deep into the top-down analysis, but let's just say if we go down to an hourly chart here. You can take your Fibonacci retracement and you can use that Fibonacci failure technique right here on a lower time frame. So understanding a trend helps me do that analysis. It helps me understand when I should be looking for a pullback and when I shouldn't. So that's one. Next was an AB equals CD pattern. Again, an AB equals CD pattern by itself didn't really give me much help. But what it does help is it helps me predict where a trending move is likely to end, right? So let's say I'm looking at something like this. Again, we have a starting point to new structure low. Let's do the opposite. We have a starting point to new structure high, right? We have an outside return. We have a new structure high. We are in what type of trend right now? Bullish. We then get another pullback, and then the market starts kind of inching its way this way. We violate this level, our previous structure high, and we now have confirmation that the trend is intact or the trend's going to reverse. Which one? Intact. So now the question is, right, we kind of walked this before, right? We know that the violation of this previous structure allows us to predict that price is likely to go higher. The magic question is, right, well, where is price likely to go higher to, right? Have you guys ever been stuck like that where you're like, I think price is going to go higher, but I don't know where? Well, now we can use that AB equals CD pattern to address that, right? So I can take the equal length of our previous extension, I can drag it onto our pullback here, and I can predict that if the market is moving harmonically, then we should see an equal measured move, right? So the next area of relief should come somewhere in this area. Again, it doesn't always happen like this. There are other factors that you want to take into account, but this is something that you can use to help your prediction. And this prediction helps you in two ways, right? If you are someone who is looking to get short, where do you think you're looking to get short at? The completion of the AB equals CD. If you're someone that's looking to get long, to buy, where are you looking to buy at? Or buy to, right? Where you're looking to buy, just how we talked about here, maybe the pullback trade, and then you're looking to take profits off at the AB equals CD completion. So I didn't mention this earlier, but a lot of people come into trading thinking that there's a certain type of analysis for trend traders, there's a certain type of analysis for counter trend traders. The secret is, guys, there's only one type of analysis. It's how to read a price chart. The only difference is how you use it, right? This analysis is exactly the same whether I want to be a buyer or a seller. The only difference is if I'm a seller, I'm using this analysis to tell me when to sell. If I'm a buyer, I'm using this analysis to tell me where to take profits. But the analysis is the same. And once you kind of understand that and accept that, man, it makes trading so much easier. So going back to the example we just took a look at, right? Let's take a look. Yeah, so we're talking about breaking higher from this level. So let's draw out like an AB equals CD move. We can do two of them, a small one and a bigger one. But let's take our most previous move here to here. I'll make it a different color so it stands out for you. And if I want to predict where this expansion is likely to go to, I can copy, I can paste, I can drag it onto our previous outside return. I'm a very visual person, so I like to draw in lines and stuff on my chart. And I can say an equal measured move is going to put us right here. Now, what else do we have at that level, right? Because trading is not about finding one thing. It's about, again, finding all the clues and putting them together. If we look left at this level, do we not have a previous level of structure? Okay, we'll add that to the checklist. Okay, we got AB equals CD structure. I haven't drawn this out. Let's draw the fibs. Again, I didn't plan on talking about this, but we're here, so let's just do it. Oh, baby, look at that. What do we have here? A Fibonacci extension. Again, you don't need to know this. This is kind of getting into it, which I apologize, but a Fibonacci extension right here. And then we even have a psychological number, right? 176 even. So we've just used this analysis, this AB equals CD pattern, which was useless before. It was a useless strategy that didn't work. Now I'm using it as a way to do two things. One, right? If I'm a buyer right here, I've got a target level. I can confidently say, I don't want to hold on to my position past this level because this is where danger's at. And if I'm a seller, I'm saying, okay, I'm going to wait until price gets to this level and then look to sell here. You guys follow me? I really want to do something cool, but I'm scared. All right, I'm gonna do something really, really cool, but you got to promise me you're not going to get overwhelmed. I want you to literally type in, I promise. I don't want you to get confused. I don't want to make this more confusing than it is, but I always thought this was really cool. Swear to God, I'll kick you out if you don't say I promise. Okay. There's this myth in trading that when someone wins, someone else has to lose, right? You guys ever heard that? Oh, when you win, your broker loses. Or when you win, the Danny boy loses, right? It's not true. So let's take who wants to be our seller. I'm going to use a name. Who wants to be our seller? George. All right. George is our seller. I'm a buyer, right? So Akil is a buyer right here. Akil is buyer, right? So in order to get in my position, what type of orders do I need to put in at this level? I have buy orders, right? Akil is buyer. Akil has buy orders. All right, perfect. All right, now George. Sound like caveman. George is seller, right? George is seller. George is waiting for price action to get this level. He's a structure trader, and he wants to sell at this level, right? So what type of orders does George have in the market? Ooh. George has sell orders, right? Does that make sense? So me and George are enemies, right? George is seller, Akil is buyer, grunt, grunt, grr, grr, battle, right? Here's the cool part. So as the market comes up here, right, I'm making money, doing my money dance, right? 171 to 176, 500 pippos, right? I'm the man. And then I get to a point where I'm like, I don't want to be greedy. I should probably take my positions off. As a buyer, what do I need to do at this level? I need to sell. Okay? I need to sell at this level. George is also selling at this level. And here's how stuff works. When price action gets to this level, two things are happening. One, you have George and all of George's friends who are interested in selling at this level. flushing their sell orders into the market. You have Akil and all of his buying friends at this level taking profit. And because we're taking profits, we have to have sell orders as well. So we're flushing our sell orders into the market. Guess what? Yeah, I spelled George wrong, yeah. Girage. Now it's sounds more elegant that way. So guess what? Girage has sell orders. Akil has sell orders. A flood of sell orders enter the market, and what happens, right? We haven't talked about how the market moves, but the market moves when there are more sell orders than buy order, or the frequency of sell orders are coming in faster than the buy order. Price drops. Now, who's the winner here? Both of us. Akil wins because I took profit. George has some more selling pressure to help push it down. George wins too, assuming it hits his profit. It's not one person wins, one person loses. It's about understanding what people are doing at different levels. And if you understand this, this is another piece of the edge. But again, I ask you this. Did we do any different analysis between the buyers and the sellers? No. We just did general analysis. We just used it a different way. What's he selling if he has nothing to sell? Buyers. Unfortunately, there are rookie traders, probably some of you guys in this room, I mean no offense, but some of you guys that are watching this 400, 500 pip move come up, you're ignoring structure because you don't really care about it. You're like me, right? Older trader me. And you're saying, man, we got a strong trend. I should buy. And unfortunately, your buy orders are providing the liquidity for George and some other institutional trader, most likely, to sell against you. And then we're winning and you're losing. Right? You guys ever been in a situation where as soon as you buy, the market goes against you? You've been got. Not all the time. It's you always lose trades. But if you're doing it up here, if you're buying up here, that's on you. If you're ignoring structure and you end up getting caught up in one of these wicks because you're buying in hopes of catching the end of a move that already went 500 pips, you've been got. And you've been got by people like me. You've been got by people like George. You've been got by many of the institutional traders out there because we're waiting for you to do that. We feast, and I don't feel bad about it because I was a dumb trader for a long time. But professional traders feast on dumb traders. Or, shouldn't call people dumb because I don't want to call myself dumb. Undereducated traders. If there are no buy orders but lots of sell orders, the market has to wait until it reaches the buy orders in order to execute those sell orders. So that's why slippage happens. As a retail trader, there will always be buy orders. Institutional trading is a little bit different because they're trading such big positions. As a retail trader, we never have a problem finding an opposing order. So you will never have a problem finding, if you're a buyer, you'll never have a problem finding a seller. This market is ginormous. That's one of the benefits of being a retail trader. No, it's a good question. So let's get more than an hour already. So let's finish this out. So while we're on here, we're talking about George being a seller, right? The next strategy that I failed at was double tops and double bottoms. One of the reasons I was failing at double tops and double bottoms because I was trading them at random places. Right? I would just trade every single double top and double bottom, and I'll give you guys a clue, right? If we're trending, right? What eventually happens in every trend? What happens when the market's here? Before it goes here? Does this look like a double top? Yeah. But I was trading all of them regardless of where price was at. So many of these trending moves, here's a good one right here, would have got skunked out on it. Many of these trending moves, I would have lost on. But once I understand how a market moves, once I understand the importance of structure, once I understood kind of predicting where a trend should find exhaustion at, like right here, now I was much more specific with the double tops and double bottoms I took. I would only take double bottoms at very specific levels. And what that did was that increased my strike rate. I was no longer wasting money on all these wishful double tops and double bottoms. I was only taking the ones that came at very precise levels. So again, that wasn't a dumb strategy. I was just a dumb trader trading it. So I hope that gives you guys an idea of how my journey progressed. and how I was doing a lot of stuff that I thought didn't work. And again, it wasn't that those things didn't work. I just wasn't using them the right way. And years later, I'm talking even like 5 years later, as I became more experienced in my trading and I started going back and implementing some of the older stuff I used, I learned how to use it the correct way, and it's been magical. Magical in a sense of not like it, it doesn't produce millions of dollars a year or something like that, but magical in a sense where you kind of really, like, the light goes off, you get it. You get why it was failing you before, and you understand how to use it within the bigger essence of everything else in a way that works for you. And I now walk into the markets and I feel unstoppable. And I don't mean unstoppable meaning that I profit every day. I'm historically about a 55% trader, so I lose just as much as I win. But I feel unstoppable because I'm very confident in what I do. I'm very confident in my ability to predict where the market is likely to go and what the market is likely to do. And I can't tell you the last time I took a trade where I felt scared. Every trade I take, I feel 100% confident. I don't know if it's going to win or lose, but I'm 100% confident in it because I'm 100% confident in my ability. And that just doesn't come from experience, but it comes from all of the back testing and the work that you put into developing your trading style. And when you can do that, I mean, you can fall in love with trading again. I love trading, and I fell out of love with it because it was frustrating. It was emotional. Once you're confident again, then it's just a game. It's playing a game of analysis. It's coming in and completing a puzzle each day. And it's just fun. And it's a puzzle where you get to consistently make profit as well, which makes it even better. So that's my spiel for today. Let's do this. Do we still want to do a Q&A, guys? I know I went a little long.